Morning, lads.
Morning. There we go.
Are we doing all right?
Yeah.
Yeah.
Morning.
Morning, Dan, Lenny, Christopher.
Morning. Just gonna clear some space on my memory card because you don't want the camera cutting out halfway through, do we? So that was third. Let's get rid of those. That one. See if we can do all of those before. I'll put that in the camera downloads. On the okay now. Video files are just mental sometimes. Like literally nearly filled up an entire 1 terabyte hard drive with this recent course, just in video recordings. And that's not even like edited versions. That's literally just raw, unedited video files. A terabyte, 1,000 gigabytes.
That's crazy.
Yeah, nuts. Right, so this morning we're just going to run through. Well, let me just paste this link in the chat just so everyone knows. Let's go. Okay, cool. So yeah, this morning I want to just spend some time looking over Euro USD last week because obviously we got a little bit waylaid yesterday. So let's make sure we get that info in today. Go through the opportunities we had on Euro USD, mark the chart up, and then we'll do a Q&A afterwards. And I think I might have to start being a bit more strict with myself and just make sure that we are actually getting through these end of week markups. I think obviously the conversation is naturally, it's good for all of us, but let's just make sure we are spending time in the right areas. Where is it? There it is. Okay, cool. Right. So where are you guys? Morning, Mark. Morning, Dan.
Mark.
Okay, cool. Right, everyone see the chart?
Yep.
Okay, cool. Hey, I'm so behind on my journaling as well. I don't think I've journaled for about a week. It's just terrible, absolutely terrible. Right, let's go then. So let's look through Euro USD, and let's kind of let's analyze. Let's go top down. Let's see what we can find. So it wasn't the best week for me personally on Euro USD, and I'll explain to you why as we're going through this. If we look at the overall, we'll do a top down like if I was starting, at the start of the week. So previous month's candle was like, I mean, it's technically bullish. I'm just going to put it down as like a non-candle because it's just shit. So I'm looking at, by the way, this is the monthly chart. I'm looking at this candle here. Okay, it's just a shit candle. Doesn't give us any direction. It's not clear what it's doing. However, we can clearly see the previous 3 months have been bearish, right? So I'm going to put in brackets bearish, okay? Because I think that needs to be acknowledged. And when you're doing these top-down analysis, and look, the same with kind of everything we do, really, just use your fucking common sense. Yes, the previous month's candle was shit, okay? It was shit. However, the previous 3 months before that were heavily bearish. And other than, a year of, 2023, 2024 was pretty shit overall. If you look at this structure, that is January 2023 to September 2024. So we had nearly 2 years of just shit market conditions. Okay, you look at that, it's just noise. Like compared to 21 to 22, where it was fucking massively bearish, I made loads of cash here, and I struggled at times with Euro USD, and this is the reason why. This is why you can still make money, obviously, in these markets because this is such a high time frame. But it's definitely worth acknowledging why Euro USD last year and the year before was quite difficult to trade. And this is why you look at Trump coming in and what he's done to the marketplaces so soon, and the reason why Danny and all his all his people love him so much is because for that period of time when Biden was in power, the dollar just didn't like the economy was fucked, wasn't it? Let's be honest, Danny. Like you guys had a really miserable time under Biden.
Yeah, not good. It was terrible. I'm
All right.
so glad Trump's in office now.
Exactly, exactly. All right. So, when, where and Trump first came into office, what, 20, no, 2016? Yeah, 2016. Okay. So 2016. So look, between 2016 and 2020, look at how volatile the markets were. Now, for economy wise, there was obviously ups, there was obviously downs. But for us as traders, that's a really good market. And admittedly, when Biden came in, we had, well, a big bullish push. But then after that, there was like 2 years of like not really, price not really doing much. So we're coming now, by the looks of it, into a really good tradable market. So yeah, 2016 onwards. So that's Trump from here all the way up to around here. Okay. To be fair, big push the first half of Biden's office, and then second half, nothing really much happened. Okay. So we like these volatile market conditions when we see these, big bearish candles on the monthly that then translate to the weekly as well. That's really, really good for us. I don't know if you saw the post that I put up last night um, about the China now placing tariffs back on the US. Expect a gap. I would expect a gap again this week. Now, it's a little bit frustrating if I'm honest, because the dollar is now in a really good position, and this is gonna sting the dollar, I think. But as I'll show you in today's session, these gaps aren't necessarily bad for us as traders. They might not be great for Danny and I want to say his people, but it sounds like there's like a almost like a racial overtone, isn't there? There, Danny and his nation. Danny and
Hey,
his
I
nation.
like my people. Thank you.
Danny and his nation might not be too happy with the China tariffs. However, for us as traders, as I'll show you today, it can give us some really good opportunities. So monthly was kind of a non-candle, but overall we're bearish, which is why I put it in brackets. If we look at the weekly, so this is how we draw the weekly. And guys, boot camp guys, we're going to be going through this in the next couple of sessions, but this is a good understanding of how I mark up my charts at the start of each week, and you will be required to do this same process at the start of each week. Okay, and you'll be posting these charts, posting these analysis, posting your breakdowns, etc., 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 and I'll be guiding you as to what is right and what is wrong. Okay, so we look at the weekly range. Exactly the same range finding is exactly the same as we do on any other pair. Okay, you just use your common sense, okay, and find your ranges. That's our most recent weekly range. It's pretty obvious. This is a weekly chart. We're clearly bearish. Okay, so we can mark on now the weekly range as bearish. Okay, and then the only other thing that we want to acknowledge is what the previous week's candle was. So the previous week's candle, now again a difficult one to understand. So we're clearly bearish. The candle before last week was bearish, and although it's a bullish candle, because in my color scheme it's white, therefore it's a bullish candle, I actually would consider that a bearish candle because this candle here. So remember about our open, high, low close that we learned about yesterday. Okay. This candle closed here. Yeah. Okay.
Mhm.
It then opened here, massive gap. So think about it from a range perspective. So we had this. It's not going to do it how I want it to. This move down here. Okay. Okay, and then whatever happened, it then came all the way down here. You can't really see it because of stupid fucking drawing tools. I never know why they do it like this. It's so annoying. Um, it then came down here, then all the way up to here, which is that high there, and then it closed here. So a bit of a mixed candle, admittedly, but the fact that it opened so low, it then came so high, manipulated so high, and then closed so low. Again, it's a mixed candle, but overall, and this is where you have to use your common sense again. Overall, I'm still bearish. So my previous week's candle was, bullish, okay, but it had a large bearish gap, okay, large bearish gap. So again, I would look at that as a bearish signal. Now look, this is just one of our charts over many charts that we're going to be looking at throughout the week. So, possibly because of all these mixed signals, we don't necessarily want to rush into trades here. You're probably going to, a smart trader would wait until next week closes really heavily bearish, right? Okay, you wait for next week to close really heavily bearish, and then all of the timeframes are lined up. You've got a new bearish range, all that stuff, and then you can take a trade comfortably, right? And that's smart trading. But there are rhymes and reasons to understand where the market might be heading next, and this is all about that kind of analysis process. Okay, so we then had a false break on the daily, which we acknowledged the week before last. Okay, which gave us a trap down here, which as you can see was blown. Okay, so all bearish signals, right? And what it tells us is that although this is our daily range here, although this is our bearish daily range, so now we can mark this on as daily range bearish, okay, and then we can do our previous day. At the start, I won't do previous days because obviously we're going to do a whole week's worth of markup, okay. This then gives me an understanding of where the market is heading, right? So my monthly candle was kind of a non-candle, but ultimately bearish. My weekly range is bearish. That's a clear one. My previous week was, well, we had in fact, at the start of this week, apologies. Okay. That is our analysis for this week coming. Our previous week was actually bearish. So apologies, ignore that. Okay. And our daily range is bearish. So from our perspective at the start of last week, I got a little bit confused there. At the start of last week, we are overall bearish. Okay. Which is good. That analysis I just gave you was what we would effectively be looking at for this week coming. Okay. So overall, we're bearish. Okay. Let's have a look at what the market does. Well, we have this massive opening gap. Okay, as you can see down here. So this is our Sunday, Monday. Okay. We obviously went through weekly cycles last week. We obviously went through weekly cycles yesterday. Okay. We do have, now this is a bit of an anomaly. We do have accumulation. We do have manipulation. And we do have distribution. Just the distribution is just a bit naff. Okay. That manipulation clearly took liquidity. Okay. And you can see how you can start then using these weekly cycles to understand, an overall direction. Now, in an ideal scenario, the distribution, of course, would be the biggest move of the week. In this scenario, the manipulation's been the biggest move of the week. Okay. But the cycle repeats itself on multiple time frames. So you're going to get your weekly accumulation here from the previous week, manipulation here, okay, and distribution. So remember, they're interchangeable. They're not always going to be absolutely perfect. We still have that accumulation, manipulation, distribution, and then we got that tiny little end of week markup there. We still have that, sorry, end of play reversal. We still have that kind of structure to it overall. But in this week, it just so happens that the manipulation was larger than the distribution, and that's okay. Okay, that will happen sometimes. You can still see the key elements, right? Cumulative phase on a Monday, nice tight contraction of price, big move to grab liquidity, which finishes on a Wednesday. Then the larger move of the week, or what would be the main move of the week, was very, very weak. Okay, which shows us that maybe there's more buyers in control last week than there were sellers ultimately, but it still has that kind of that flow and that structure to it. Now, for me, it meant that it was a pair that ultimately I couldn't trade last week because all my time frames are lined up bearish. Therefore, I'm ultimately looking for sells. And whilst there was a sell on Thursday, I think there was a sell on Thursday. I was actually in a buy on, what was I in? No, was I? Can't remember. I was in a different setup. I was in USD CAD short on Thursday. So Euro USD Thursday. So that would have been a long on, yeah. So I don't think I traded Euro USD last week. I don't know. Last week's a bit of a blur, if I'm honest. But I know that there was a setup here, and you can probably see it. Can anyone see that without me marking it up? Can anyone see that setup? Joe, I'm going to pick on you just because you're at the top of my screen.
What, so say that again, Chris, sorry?
So, can you see what the setup might be from here?
It was obviously price rises.
So use your little drawing
Yeah,
tool.
I've got it here, mate. Yeah, I've got it here. So it takes a bit of liquidity there.
So you need liquidity. You need it to, the setup needs to grab liquidity. So the setup is in that circle.
Okay.
Okay. So what would be our reasoning to buy from there?
It takes liquidity there, obviously. And
Remember, you're looking for external liquidity, you're looking for a false break, and then you're looking for a trap. Those are our setups, right? So you're looking for a false break from the left.
oh, fast from the left. Okay.
So I'll draw out the structure for you to make it a little bit clearer. So let's say this is our structure. Okay. Let's say this is our structure. Okay. You're looking for an external liquidity sweep.
Okay. So then obviously this is your break there.
Perfect. So that's your false break. Yeah, bang on.
Obviously takes liquidity.
Where would be your trap then?
The trap would be, hang on, just a bit messy, but yeah, up here. Is that right?
It could be. There's another area that I would say is probably more logical for a closer target. Think about institutional input. Think about large injections of cash and what they leave behind.
Okay, then maybe here. Is that right?
Or nearly. So I would say that this is your trap,
Why would you say it there? Just out of curiosity.
okay? Because there's been clear institutional input in that move. Mark, why has there been clear institutional input in that move?
Because of the size of the candles,
Yeah.
sell candles,
What have those candles left behind?
imbalance.
Exactly. Okay. So the imbalance is here. Oh shit, on that. The imbalances are here. That's imbalance one. And down here. Okay, imbalance two. So those are imbalance candles. Um, Linny, I'll throw it over to you. Linny, what do imbalance candles show us?
Like lots of pressure in that direction from the
Yeah, lots of
banks.
lots of selling
Lots
pressure.
yeah, selling
Um,
pressure in this
Lots of
example.
selling pressure.
Like
Are
lots of
they
orders in the market, right? That move the
lots of
price
orders? That's
quickly.
it. Are they efficient or inefficient?
Inefficient.
Inefficient, okay.
Yeah,
And who is able to create inefficiencies?
the big boys
Big boys,
with
right?
lots
The
of
big
money
boys.
that can
Okay.
move the
So
market fast.
Institutions.
that's it. So this is where again common sense prevails, right? So this is very clearly our false break, okay? And this is where you have to be quite careful with your trading, okay? So we've acknowledged that all of our time frames are bearish, okay? The monthly is a non-candle, but we're going to consider it bearish because of the previous candles. Weekly range is bearish, previous week was bearish, and the daily range is bearish, okay? The reason why the daily range is bearish is because the daily range is taken from here to here, okay, based upon the daily, because all we've had on the daily is we've had a first break, okay, which means we're still overall bearish. We're not bullish until we have a daily shift like that, which gives us our true break, okay? Okay, so we're still overall bearish, okay? Go down to the 4-hour chart, okay? Oh, shit. Come on. Go right down to the 4-hour chart, okay? And we draw out our ranges, okay? And we have a bearish 4-hour chart, okay? Which means our last bearish range on the 4-hour chart is this, okay? That is our bearish range. So that's the range that we're trading in. So our 4-hour, okay, is bearish, okay? So our 4-hour is bearish as well. So all of this stuff is what? What type of structure is it?
Internal.
Internal structure, okay? And we don't rely on the internal structure because what is the purpose of internal structure?
To create liquidity.
Yeah, to create liquidity, yeah. But what is in relation to kind of external structure, okay? What is the aim of internal structure?
Take profits.
Yeah, take profits to grab liquidity from the left. But ultimately, the expectation is that our current momentum is going to continue. Okay, think about external versus internal structure. Okay, once we've grabbed external structure or external liquidity, should I say, the next target for price is internal liquidity. So the expectation is that we will come to grab some internal liquidity, but price is going to continue. Okay. So although we have bullish structure here on the 1 hour time frame. Okay, we have this clear bullish structure on the 1 hour time frame. This is only internal structure and therefore cannot be trusted like we would trust the external structure on the 4 hour. The other thing that is an issue that I have an issue with it is it's within a larger 4 hour range. That's our 4 hour range. That's our bearish range. And that range is in line with all of our other higher time. Yeah. So the problem with this internal structure is whilst it can be trusted in the short term, it cannot be trusted long term. It cannot be trusted long term because we understand, because of our relationship between internal and external structure, or sorry, internal and external liquidity, we understand that if prices grabbed external liquidity, and I'll pick on you, Lewis, because you've just jumped in. If prices grabbed external liquidity, or I've just seen you anyway, at least you might have been here earlier, to be fair. If prices grabbed external liquidity, what do we expect price to do next?
A reaction.
Yeah. What do we expect it to do after it's grabbed external liquidity?
React in the opposite direction.
Yeah. To do what? What's it going to grab next?
It's going to create new structure.
But what's it going to grab? So it's grabbed external liquidity. What's it going to grab next?
The internal liquidity.
Internal liquidity. And why does it want to grab the internal liquidity?
So it can balance out the market.
Balance out the market. But what's its intention?
To put itself, well, the banks want to put themselves in a better position to either buy or sell.
Yeah. Yeah. So they want to, in this example, they want to bring the price higher by grabbing internal liquidity to then do what?
Dump it again.
Dump it again and take external liquidity. And so the cycle continues. So do you see how the internal-external relationship really helps your understanding of what your trade might do next? Okay. For example, okay, this trade up here, actually, when you look at it in hindsight, whilst a perfectly valid trade, can you clearly see now why it didn't go any higher? What's our best trade? What's like our favorite trade that we want to take?
After external liquidity.
Yeah. So opposing external liquidity. So in a bearish market, this is the opposing external liquidity. Okay. That in a bearish market, so buy side external liquidity is our fucking gold, absolute gold standard trade. Because when you zoom out and you look at it on a higher time frame, all that is what?
First break.
A false break. Yeah, that's literally all that is. That external, and we mark it on as external because it's on a higher time frame, but when you break it down, it's just a false break on a very high time frame, indicating that we probably now have a trap down here. Okay, you see how it all fits together, right? Every concept that we learn is built on the basis of we have structure, we have ranges, and we have liquidity. Liquidity being our driving factor. And when we have clear momentum that shows us the market is bearish on whatever time frame, because with respect, it doesn't matter. But when structure is bearish on whatever time frame, if we have the opposing liquidity swept, it gives us a false break. That is an external liquidity on the wrong side of the marketplace, effectively. Smart money traders, supply and demand traders, they would see that as a trade invalidated, okay, because it swept their supply zone. For us, we see that as a golden opportunity. That's why we make money and smart money traders don't. The trades that smart money traders consider failures are, for us, our very best trades, which is why they lose money and why they make money, okay? Because they just don't understand what the intention is of the market. So whilst that setup was perfectly valid, that one here, and you would have got yourself into a nice position and taken some profit off, okay? And I'm not going to knock that because, you know, higher time frame wise, you know, you are still bullish. You have to also appreciate the fact that we've taken external liquidity and look at how it moved afterwards. Ultimately, wherever this gap comes, what I would love, this is what I would love, is if we opened somewhere like here tonight, then we could just sell the shit out of the marketplace all the way down, hopefully all week, into that trap. That would be perfect. That would be a great week for us, okay? But knowing the markets and how they are, I would probably open here. and then it'll do like it will just like stay here like all week because the markets are just wankers and they do shit like that all the time. All right, so we'll wait and see. All right, so perfectly valid setup there. But you would just need, and this is why it's so good using those higher time frames, right? Because even on we're looking at this 4 hour range. We understand that that's a reversal point. We've got that failure to make a new high, which means now we've got a very clear shift. Okay. We have had a very clear shift. We've got a false break and now we've got a true break. So the market has now officially shifted back bearish. All of our time frames now are in line with each other. It's really great market conditions for continuation sells now. But the great thing about trading higher time frames is you can find positions like this that might still work out, even though you're in an area where price might reverse. You just use your common sense and be like, well, that's where the imbalances are. So it's very likely that this is going to be our trap. And as you can see, price takes the trap. Okay. It takes the trap and then it starts breaking down again. Okay. So, lining up the momentum, understanding the relationship between internal and external liquidity is so important. And knowing what you know now, you can look at the markets and be like, well, yes, the market is pushing bullish. Okay, and Chris Lynn, he's a perfect example of this. He understands that the market is bullish, and he just gets himself into his positions, gets himself out of the positions. He's not looking at a long-term hold. Lenny's not getting into a position like this and looking to hold it up to here because he understands that it's probably not going to go up to there. But if he can get 2R out like that and get his 2R out, then he's happy. And the next day he'll do the same and he'll get his 2R out and he's happy. Okay. And he'll just jump in and out of the marketplace. Okay. So, we can use that understanding. The reason why I've gone into quite a lot of detail there is we can use this understanding to help us understand where the market is likely to go next and therefore make more informed trading decisions. You could have absolutely traded this section of price like Chris Lynn did last week. However, you need to acknowledge that it is internal, that it's probably serving a purpose, that it might not go much higher than the equilibrium of this range. We were definitely assisted last week because of the big gap, which needed to be filled, because a big gap is like, the supreme version of an inefficiency, right? There's such an imbalance in the marketplace that there wasn't even the ability for a candle to fucking print itself. That's how quickly it moved effectively. Now, obviously, if the markets had been open over the weekend, then this would have been a more of a progressive move. But gaps love to be filled because they're like an imbalance. They're like an EPA level. They're inefficiencies and they need to be filled. Okay. So, right, let's go through and actually look at some trades now. Right. So we had a shift here. I think we discussed this very briefly yesterday, didn't we? We had a shift here. And then we have got an MSU set up here in London. MSU. Lynn, you took this one, didn't you?
Yeah, but it went PE.
Did
I
it?
put it in like round here or whatever.
Okay, fine.
Before.
So your MSU2 would have been here. Yeah, MSU.
Or maybe I closed it if that was news. I can't remember, but it didn't win that one.
Did it not? Okay. Good setup though. First break. Okay, failure to make a new low. So therefore, first break here. True break over there. Nice closures above both. MSU was there. MSU sweep there. And then obviously you had your engulfing candle here. I would place my first profit target above the Asia high. That would be liquidity taken. So that would, I always come out a little bit sooner than the liquidity point. Simple reason being is that, I don't want to run the risk of price just coming near to liquidity and then reversing on me and taking my stop out. Okay. So I would have tightened my position to about 2.1, 2.2, something like that. And I would have closed out because it was Monday, because it was counter momentum. I would be closing out that position at that full TP. Okay. I'll only hold my positions, or I'll hold 10, 20% of my positions if I'm trading in line with momentum. If I'm trading against the momentum, I always close out full position at around 2R. Just want to get in, want to get out. Don't want to be mucking about with it really. Okay. So let's log that. So this was on the 3rd of February, 03/02, 2025. EURUSD, it was on Monday at 10 a.m. 10 a.m. Been a nice, good little pullback as well. So 10 o'clock candle closed. Yeah, nice little pullback here. Yeah, it's a good little candle to be fair. Right, 2.2, 2.22. And it was MSU2. Okay, so we were with or against momentum. So this isn't for me on my checklist. That's not are you with momentum? It's just acknowledging what you are. So I'm against momentum. I've had a key liquidity swept, which was this liquidity here to the left, the external liquidity. So that fueled my move. Key time of day, yeah, London session, 5-minute shift. We've acknowledged that. First break, true break, 1 to 5 minute MSU, yep, and an easy 2R potential. Yeah, cool. And this trade didn't actually come back to break even, and it ran all the way up to 6.4. So in my strategy, just a 0.6.4. Lovely little trade. All right, and then we just hit the green button, run the script, and it fills in all the blanks for us. Okay, lovely, lovely, lovely. Paste that in there. Okay, so reversal trade into gap on Monday. Price gap open below the external 4-hour liquidity. T 5-minute range. Oh, 5-minute shift. 1 minute MSU. Clean entry up to 2R. HM. Right, cool. So nothing else. I wouldn't have traded anything in here. Let's get rid of that. Get rid of all this stuff. Okay, cool. So an interesting one on Tuesday. So we've obviously got a clear, 15-minute market has now shifted very clearly. So first break, true break, you can see the 15-minute shift. We then have this nice internal sweep, okay, which gives us a false break. Okay, false break down here. Let's have a look at it on a slightly higher time frame. Okay, so there's two places you could place your trap. There is, I mean, that's obviously the extreme of the trap, but there's also another little trap entry down here, or trap position, sorry, trap zone here. Let's see if we get any entries on this. I don't think we do personally, no. So, and this is one of those examples, and Mark, this is one of the things you'll have with gold quite a lot. Okay, we spoke about the 50% pullbacks. It does this quite a lot, and you really struggle to get an entry. The only real entry I see is we get another false break on the 5-minute time frame here, which gives us another trap up here. Okay, so that's definitely a trap that we can now seriously consider. And then let's just put the replay on. Let's see what we get in the 1 minute. And then so false breaks here. You then get the shift back bullish. That's now shifted bullish. And then we have an MSU there. Okay. This is what, I mean, look, I would say this is verging on what we class as a hidden MSU. We haven't got really clear structure, as you can see here. I mean, I suppose really you have got the structure point there, but I quite like, can anyone tell me why I quite like that sweep? What is it about that sweep that I quite like? KB, why don't you jump in? Why do I like that sweep? Or Sean?
Just the large engulfing.
Not the large engulfing, but something about the sweep itself.
The location.
Yeah, I mean, we are back into discount pricing. Yeah, that's definitely valid. I'm talking
It's
about
the speed of it.
the
Just the
speed
speed
of it. Yeah. What does it leave? What does it leave
in,
behind?
imbalance out.
What does it leave behind?
Imbalance.
Imbalance. Yeah. So that for me, I'm looking at that thinking, do you know what? Speed, look, boom in, boom out. What is that there for? What is this?
ISC.
ISC, exactly. Institutional sweep candle. Okay, that's what we're looking for. We want that speed, and you'll find it on all time frames and lower time frames. And then look what happens as soon as that happens. We then get some structure. We get a nice little first break, true break, engulfing down here. So that would be our entry. Okay. Now, trap is up here, so I set my profit target first always, and then I decide. So the way I determine whether I'm going to go MSU1 or MSU2 is based upon where my profit target gets me to 2R or not. So on this basis, I wouldn't. So ideally, I always want an MSU1 because then MSU1 gives me a safer stop, saves me having to get stopped out and re-enter. But if I can't get it for any reason, just tighten my stop to like something like 2.2, 2.3. That's then my position. Nice, easy trade, in and out. First profit target would be off at 2.3. Second profit target, I would then take off at the top of the trap, which would be up here. Okay, so 2.95. Okay, that would be my position. Mark that on. Let's mark that on. Copy that in there. So this was on the 4th of Feb, 2025. Euro USD. This is like 115, 140. 13.45, 2.9, MSU2. Okay, so am I with or against momentum? So I know I'm against momentum in terms of the higher time frame, but I'm in line with momentum, so I've acknowledged that. Have I got a key liquidity swept? Yes, I've got an internal structure here to the left. So I've a look at my 15-minute time frame. Okay, I've got a nice like wick pattern there, so clear liquidity point. So my key liquidity, and we're going to discuss this in the module after next, for those of you who are newer, what our key liquidity points are. So for me, that's a structural point. That's an external liquidity sweep of a 5-minute range. So that for me is a lovely little false break sweep. So yes, I can tick that off. Key time of day, I'm in New York Open. Have I got a 5-minute shift? Well, the market is already bullish. Okay, but we do get a lower time frame shift, as you can see up here. So I'm happy that we've got a shift. We don't actually need a 5-minute shift. Why don't we need a 5-minute shift in this setup?
Because at the time we're heavily bullish already.
Yeah. More specifically, Anton, more specifically about the structure on the 5-minute chart at the moment. Why don't I need a 5-minute bullish shift? Don't think Anton's there.
I'm just on the mobile.
Oh, are you? Okay, fine. KB, I'm going to pick on
You're
you
in
again.
line with momentum, aren't you?
In line with momentum, yeah. KB, why don't we need a 5-minute bullish shift for this trade?
It's just in line with the momentum.
Yeah. So the 5-minute, so the answer I was looking for is that the 5-minute is already bullish. Okay. Yep. All we've had is a first break or a false break. Okay. So we haven't actually shifted bearish. And I see some people getting this wrong sometimes. They are sometimes waiting for the false break and the true break. Okay. They're waiting for that false break and the true break when the market is already in line with their trade. Okay. This market is already bullish. So we don't need the 5-minute to shift bullish. What might we need to shift bullish?
The 1 minute.
The 1 minute, yeah. So if I look at my 1-minute structure, and I'll just average some of these out, okay, my 1-minute structure is actually bearish. It's internal to this 5-minute range, but my 1-minute structure is actually bearish. So there's absolutely no harm in waiting for the 1 minute to shift bullish, okay, which is what we get here and what we get here. Now, the reason why I don't acknowledge the 1 minute shifts that often, by the way, guys, is because the MSU entry itself will normally give us that 1 minute shift. Because if you think about the structure of an MSU, right, it's a shift, right? Okay, that's literally what the MSU is. Structure, manipulation, and then continuation. Okay, so the reason why I don't often acknowledge and talk about 1 minute shifts is because the MSU entry itself will typically give you your 1 minute shift. But I think for the purpose of today's session, it's important to acknowledge that, you know, we have had quite a pronounced pullback on the 1 minute time frame. So there was absolutely no harm. Like trading from here would have been a risk. It would have worked out, but it would have been a risk. Just like trading from here would have been a risk. Just like trading from here would have been a risk. Okay. And this is the problem with trading before you get that confirmation. This would have been a failed trade. That would have worked out. But how many, if you take trades like that, what do you think the problem is with taking trades like this?
You don't know how many you're going to have to take until it shifts.
Exactly. Okay. You're not using logic and common sense, right? You're assuming the market is going to do something. So what it does is it builds really bad behavioral patterns in your trading. It teaches you, because you catch this one every now and again, it teaches you that this behavior is the correct way to trade, when actually it's the worst fucking thing you can do. Which is why, and I know I go on about this all the time, which is why our entries are often much later than those very glossy, fancy looking Instagram entries that you see where people get into the market like this. And they go, oh my God, guys, you know, I've just taken I've got a 90% win rate and my average stop loss is 0.5% and my average trade is like 42R. And it's like, okay, right, you're a billionaire then, are you? You are the most successful trader on the planet and you have 150 million of investor capital, because if you catch that at 80%, like it's just, and you'll start to see it now. When you go through your Instagram feeds, you'll start to see dickheads. And now you understand how to trade effectively. You start to see dickheads take trades like this all the time. And it is, I know what it's like because I remember being in that position. I know what it's like. You see that and be like, oh my God, this guy's cracked the code, right? I'm telling you now, these guys take so many fucking losses to get that one trade that they're probably not profitable even if they do catch a 42R position. Okay. And the chances are they don't catch that because by the time the broker's executed and they place their stop, they're probably here anyway. Okay. So they might draw it up at 42R, but they probably only get like 8 or 9. Okay. And then they've taken a loss here and they've taken a loss here and they've taken a loss here and here and here and here. And so by the time they finished, they end up with like 1R or 2R. And the problem is that they have such bad behavioral patterns is that they make mistakes, they get greedy, they revenge trade. Okay. So one of the best skills that you need to develop with the strong money forex way is that patience and that discipline to be like, right, the market is now moving in my direction. Okay, what's the one rule? And I spoke about this, I think, in Friday's session for those of you who are newer. What's the one rule we have about when we take our trades? What do we enter on and what do we never enter on?
Never enter on a breakout. We
never enter on a breakout.
Pullback.
Always enter on a pullback. Okay, and that's the theory behind the MSU. You don't enter here, and you don't enter here. You enter here. Okay, because if your trade fails, you're going to be out of the market nice and quickly. There's nothing worse than entering here. And I know Danny and Linny and maybe if Anton, you'll have definitely been in trades like this. There's nothing worse than entering here, right?
Yeah.
And then your trade just doing this for like fucking 3 hours, and then eventually, and then giving you a little like, oh, it's moving, then boom,
it's gonna go, it's gonna go,
and just fucking taking you out. All right, that is the worst fucking feeling because you just sit there for hours just watching the trade. I would much rather enter a trade like this, okay, and it do that, and just take me out like 10 minutes time. I would much rather that happen than sit in drawdown for like half a day. And we've all been there. Those of you who are experienced in trading, you'll have all been there sitting in drawdown for like fucking London session or sometimes holding it overnight. That's the worst one, isn't it? You hold it overnight and it takes you out London session tomorrow. Oh, that amount of trades I've had to be like, it's fine, it's good. I would much rather be taken out straight away. Or the beauty of the way that we trade our MSUs, what will normally happen if you do have everything in line is it will do this and it will go straight into profit. And you'll have seen this with your good trades. Mark, your trade on Thursday and Friday, perfect example. How long did it spend in drawdown?
Minutes,
right? Because you had all of those moving parts lined up together. Okay, we spoke about the Friday trade and why it might not have been the best trade, but even that trade worked out. But Thursday was like fucking perfect, like A grade. Like if I was your teacher, you'd be getting a gold sticker from me. Put that straight on the front of your workbook, mate. All right.
Yes, please.
So and that's the beauty of it is that if you catch the position right, if you catch it on a pullback, and you'll know this now. And it's I remember that revelation. It's one of those like light bulb moments for me. It's been like shit. Every time I enter on a breakdown, the market always pulls back, right? Because what is at the top of a breakout? Liquidity, right? At the top of a breakout is liquidity. So of course the market's going to pull back because, and what type of liquidity is that on a very low time frame? But what is it?
External
liquidity. And so once price has taken external liquidity, where's it going to go next? Internal liquidity. Okay. And what is the MSU? What is the MSU?
Internal liquidity.
Nope. On a 1 minute time frame, what is the MSU?
External.
It's external liquidity, right? And it's also the opposing liquidity of our 1 minute range, which is what? What type of break is it?
False break.
False break, which gives us what?
A trap.
A trap. Okay. See it. You see, I can see you. Like I can see from the little smiles on some of your faces. Be like, oh,
it's all coming together.
God. It's all the same. It's all the same. And that's all an MSU is. It's just a manipulation. And on a 1 minute range, It's our golden setup, right? That's why the MSU works so well. It's the external liquidity on the opposing side of momentum, which gives us our false break on the 1 minute time frame and therefore our trap. Okay, external liquidity on the wrong side, which gives us a false break and therefore a trap that we can buy into. That's it, it's all the same. I've basically made a strategy out of one concept, and I've tricked you all into thinking that there's loads of complexities in it, and that you just need to understand one concept. Okay, manipulations, false breaks, and traps. Okay, that's literally all it is, over and over and over again on many time frames. Okay, and I've just packaged it up and spread it out over a month, just really to waste all of your time. That was my only intention. All right. Okay, cool. Look, we'll have to finish there. Just got the boot camp. All right. So look, hopefully that makes a lot of sense. Yeah, there were some good positions on EURUSD. Personally, I didn't trade it. I'm working on, making sure I'm only trading in line with momentum at the moment. So there were definitely some good positions. Those of you who are trading less pairs, these are the sort of positions that you could take. Look at these two trades. So we had one trade here, which was like 2.2. One trade here that was 2.95. Sam posted a really good question the other day. So, how many trades are you taking per week? 1 or 2 is all you need. You trade both of those positions at 0.5%, you've come out of that week with 3%. Like, why do you need more than that? 12% a month on 200K's worth of capital. Someone do the maths for me. 24 grand. There you go, did it for you. And I'm not joking, you could get 200K's capital in 30 days. If you can do 12% a month, you could have 200K's worth of capital in 30 days' time. The following month, you could be getting 20 grand after profits have been taken out. You could be getting 20 grand into your account from those 2 trades. That's all you need. Patience, discipline, understanding. That's it. You get a 200K account with FTMO. You can pass that in 30 days with 14% you'd need. So probably 35 days. Let's say you have a really good couple of weeks. You could pass that in 45 days. Okay. After 30 days on your live account, you've done another 12%, trading at 0.5% risk. Okay. You take 2 positions, they make you 3% a week. That's 20 grand in your bank account that you didn't have before from 2 positions a week. That's it. You don't need massive numbers. You don't need loads of trades. In fact, if you're trading, more than once a day, you're probably costing yourself money. Like, I didn't trade much last week because of obviously everything that happened. Certainly the back end of the week. Back end of the week, I took 1 trade. And it was my best trade of the week. And I often find that, I'll be honest, I often find that I spend so much time in the charts, obviously coursework and, analyzing and doing reviews for you guys and all of that stuff. I spend so much time at the charts that actually my best days are when I'm busy. I do my forecast in the morning. I then will look at the chart like once or twice. I'll see a good position. I took it. My best trade last week was on Thursday when I was fucking sat in hospital waiting for Anna to be discharged. And it was just 1 trade, simple, 1 shot, 1 kill, in and out. And it was, my best trade of the week. So there's a lot to be said about that. And, over trading can be the death of a trader normally as well. Anyway, right, let's jump into boot camp, guys. Thank you for joining us. I really appreciate your time and your consideration. Hopefully that's been helpful for new guys and old guys. That's not age related. That's to do with how long you've been here. All right. So, yeah.
Sure. Right. Whatever you say, check.
Right, guys. Boot camp. I'll see you in a bit. Non-boot camp. If you need anything from me, I'm around all day. Just give me a shout. Okay.
Hey, great
Thank
session.
you.
Cheers. Bye.
Bye.